The following is a presentation of TFNN.
On this day, oh, I forgot to play it, don't we?
Then it's all just a little bit of history repeating.
Almost forgot. In 1869, the first warning signs of the coming panic that would come in the next couple of months of 1869 in the stock market, the New York newspaper reports that an IRS auditor has discovered that trustees of several city churches have taken $2 million in trust funds and used them to speculate in stocks. What's more, several parishes have taken out mortgages on their church building to answer margin calls. Where the shepherd wanders, wool hunting notes chronicle James Medbury, the sheep are apt to go astray. And you can always check that stuff out on Jason Zellwig's website. And I've got the link here on Tiger TV if you ever want to check out his website. But every day he has this day in financial history, which I think is interesting. I went through a great deal trying to figure out when the last time we've had such divergences, hopefully thinking that maybe if I can figure out why the dollar's strong and gold is still holding up and many things are going on, if we could find a place in history maybe I'd understand this market just a little bit more. I think we're headed down, and I'm more than willing to sit on my hands no matter where this market goes for a while, thinking that this could get worse. In fact, days like this make me think that there's a lot farther down than up. And my call is, of course, that we're going to be pulling back slowly to 1822 and probably lower than that, but maybe that'll be our first bounce. I actually sent out a fairly long list. I don't know how many, 60? Yeah, someone maybe can tell me. 60 charts this morning in my newsletter, and actually did a follow-up with more of them early afternoon. And all these are confluence charts. We'll look at the Apple one here today, but confluence, pretty good way of looking at stocks that have been going up in ABCs and where probable support would be. I put out a bunch of them just on just how far down would be in most of those stocks. A lot of the stocks that have already moved down have blown through them. We've seen that this morning. And that basically, I knew we were bouncing here mostly because we'd been hitting so many confluence levels. But I put a lot more charts out there, the more stronger stocks and ones that have rallied off the bottom, things that I may be looking at adding positions on. But we'll talk about Apple's because I think it's probably one of the more significant ones. But I have a feeling Apple will tell us when the next bounce in this market is coming, albeit much lower. But I've got a couple of predictions that I'll make in the last few minutes of the show. But part of those predictions are what I did over the weekend, which is look through a lot of history and when things like the dollar was strong and gold was strong and everything else seemed to be going to hell in a handbasket. And I think I found an answer. But I don't think you're going to like it. And since it's such a buzzkill, more than the ads during the Super Bowl, boy, when you want to talk about a buzzkill, I want to cut my wrists now. Oh, boy. Can't call a young man who can't throw a ball, throws like a woman. Oh, boy. Buzzkill City. I don't know who wants to watch this. Everybody wanted to watch it. But, boy, I tell you what. Buzzkill for the ads is all I got to say. Everybody wanted you to feel horrible about something. I did like the Budweiser ad. I felt good that the dog got saved from the horrible wolf. There were some nice ones in there, but boy, do I have to disagree. The one on the race car driver that was never home. Apparently, these guys don't know any race car drivers. All I know, because every race car driver I know flies out on Thursday night or Friday night, practices on Saturday, races on Sunday, and they're right back home. And this goes from the biggest race car drivers to the smallest guys that race on the weekends. They're not gone as much as they'd like you to think. This guy was supposed to be on the road everywhere. But I think they're just trying to make you feel bad. The Cats in the Cradle song. Boy, I tell you what, another song that makes me want to kill myself. Ugh, boy. Buzzkill City. That's all I got to say. Anyway, I was busy watching something else. I was busy watching the Animal Planet show. And, of course, for halftime, they had Kitty Purry. And, what a cat. What a show. What a cat. And, of course, I had one bet on the Super Bowl yesterday, and that was whether or not Lenny Kravitz would have on any scarves. He had none, so I lost. My bet was $10 that he'd at least have 2 scarves on. And I got 2-to-1 odds. And, of course, no scarves, so I lost. But what else on that? That was about it. I fast-forwarded through it this morning just to go back and catch to it. But, boy. If you guys want, maybe someone can say it, but it is, I don't know. Maybe someone felt better than the ads than I did, but they were all kind of horrible ads as far as I could tell. A couple of good ones, but most of them were, I think they want to make us feel guilty about it. Literally everything. Anyway, Some discussion out here this morning about changing the arrangement for taxes. I think a lot of people, I had a couple of people ask me over the weekend what was going on and how does this whole thing work. It is called the double Irish arrangement. We're talking about taxes for corporations. And let's do it with Google, because it will make a great deal more sense out here on how this works as people discuss whether or not they're going to make any real changes, which my guess is that they won't. But let's say Google has a advertiser pay them for an ad in Germany. The ad agency sends its money to Google in Ireland, which holds the intellectual property rights. The tax payable in Ireland is 12.5%, but the Irish company pays a royalty to a Dutch subsidiary for which it gets an Irish tax deduction. The Dutch company, this is actually called the double Irish with a Dutch twist. The Dutch company pays the money yet to another subsidiary in Ireland with no withholding on tax from inter-EU transaction. The last subsidiary, although it's in Ireland, pays no tax because it's controlled outside of Ireland, in Bermuda or another tax haven, and all the money is washed. So if you ever wondered how all this stuff works, that's basically it. But that's the double Irish arrangement with a Dutch twist, which is what it's called. But kind of interesting. Didn't finish my football thing. And just when you hear scientists start rattling off without actually doing any tests, I did want to bring up the supposed Inflategate that went on. And over the weekend, some scientists actually did real tests. Both Bill Nye and another Neil deGrasse Tyson were blabbing about how it had to be, the balls had to be messed with. Well, Bill Nye gets an F. And the reason he gets an F is he basically used the formula for gas pressures without putting in what the pressure was at the level that it was being done at. Basically, they did a gas pressure analysis like the footballs were out in the middle of outer space with no pressure coming down on them, since there's atmospheric pressure of about 14 pounds, and the ball's pumped up to 11.5 pounds, you have to actually go back. So anyway, a bunch of people started doing real pressure tests out there. And guess what? When you put back in whether or not there was local pressure around the ball, it comes right back down to 5%, and that falls right in the range of a 20-degree drop from filling the balls inside to the outside. When I first heard this, I raced motorcycles for a number of years. I had an air pressure gauge that was $100 that was filled with water, or filled with fluid, actually, filled with alcohol, so that it wouldn't have all kinds of errors related to temperature and pressure. But even then, I could put the tire warmers on before I'd go out and race. A lot of changes in temperature. I thought this was rather bogus when it started, but if you go out and find it, there are decent scientists.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Greg in Las Vegas says he loved Steely Dan at the top of the hour instead of the normal horrible stuff they play. Can we have more of that? And I second to Greg in Las Vegas. We certainly could have better songs at the top of the hour. Maybe this is the first step to a better world. In the meantime, he says, please review TLT. And I have a feeling basically what we are looking at in the TLT is the extreme move, and it pretty much stopped right where it should have. And that is a 1-to-1-618 expansion of the move from 118 is your A point on November 3rd. Your B point was December 16th at 127.72. Your December 24th low was 122.39, and that basically was a 50% retrace. And we went up to 138.50. 138.32 was the 1.1618 to 1, and we've pulled back here. So my guess is that we could go sideways for a while out here. Probably going to pull back. You've got a couple of nice gaps, actually. You've got a three-gap play, a minor three-gap play. Let me put it that way in the TLT. So could you get back to 132? You could, and there could be some major movement in the government, and maybe something like that causes this. I'm not the biggest bond trader in the world, but certainly if you just want a pure technical look at it, came up with monstrous strength out here. And if you're expecting any more out of the TLT higher, my guess is that you've probably got everything that you're looking for. And that would be it. 138 is the 6318 level. 618. Yeah. I'm looking at it here, and nope. That would be it. 1618 is 3832. So I don't know how you'd put one together that was 138.87. Somebody in the den thinks they have another look on it. Yeah, maybe you could move it up, but I use the peaks and valleys of the dailies, not the weeklies. It's too easy to bury one halfway through the week or at the beginning of the week or the half of the week. I don't spend a lot of time looking at it. Of course, I've got my power law vector indicator number to really show me how the energy comes in. But I think we've got the 1618 already finished out here. Okay, what else do we have going on? Talked about confluence levels, and take a quick look at this. Now, one of the things I think is that we're going to find a bottom in this market, and that bottom is probably going to come in somewhere when we hit the confluence level in Apple. Actually, I need to move that out. The first fib node starts on April 15th at $73.05 from last year. The second one actually comes back in. Well, actually, the second one comes back in on October 15th. That will make some support around this gap level at about 100 to 105 bucks. Now, on the shorter time scale, we're basically looking at the ones that start on October 15th for the last one, and right about 104.63 on the January 6th low. That sets up the Fibonacci retracements between, what is that, between 110.59 and 110.62, which is everything you're looking for figuring out confluence. But that would be it. If this thing breaks 110, it would be very, very interesting for me to think that we'd broken probably the strongest stock ever in the stock market. We did test with higher volume. We're not able to hold that high on Friday. On the 30th, you had 83 million shares compared to 68 million shares, but it could not hold it. You still may get a retest of the 119.75, but my guess is after that, you would probably want to look at a test of that 110.50 to 110.62 area. If it would break that, you've got to watch about the entire market, because Apple is a single point of failure for the entire market now. It could go down, and that would be it. Anyway, you can be like Greg in Las Vegas and email me at path@tfnn.com or call me at 877-927-6648. We've got a lot more charts to look at today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a question that in my opinion on crude oil, and we are up a buck at 49.28, kind of at the high range of what options are saying we should be in. But, you know, my guess is that we're probably stuck around this is kind of the very high end of that range. We're probably stuck around 45 to 50. At least that's what options are telling me. I don't have a position in it. I don't have a good feeling for it. And I don't like the headline risk in crude right now. I am probably as worried as I can be that there will be a war in the Mideast. I actually was going to do my predictions at the very end of the show today, but I'll bring this up because it has to do with crude mostly. But there was only a few times when we've had markets that have had this kind of diversity in opinions between things like the dollar and gold and a lot of things that just don't make sense. And they were before major wars. And then when I started seeing that, then I thought, well, are they like World War I? Well, sort of. Are they like World War II? A lot more. I saw again that ISIS was out burning books over the weekend. All it could make me think of was the Third Reich burning mountains and mountains of books that they did not like. And And then, it kind of hit me again about there was a ship that was trying to get a bunch of Jews out of Germany that came to Cuba. I think it was called the St. Louis. And no one wanted anything to do with them because they didn't want to anger the Germans. Basically, it was the policy of capitulation, and it just no one wanted to anger. Oh, we can't anger the Germans. Oh no. Of course, Roosevelt had the opportunity to let them come to the United States and didn't send them back. And I think 3/4 of them died in the concentration camps. But there's a lot of that right now. Everything I see, especially the reports of the negotiation with the Iranians about how the West is willing to give them literally everything they demanded to get them to sign a piece of paper, which only brings me back to that piece in our time. The way I see this market moving, I think that there's a definite opportunity for not just minor skirmishes as we've seen for a while, but major skirmishes as we see the rise of people that are clinically insane and no one willing to either call them on it. We can't even call them terrorists here. No one, they're like shivering in their boots to call people that killed 2,000 people terrorists. And it just reminds me so much of Neville Chamberlain waving that paper around for peace in our time, whistling past the graveyard. But if you want to look at the technicals, for me, both in World War I and World War II, we saw a lot of this. Now, World War II is a little less clear because, of course, the U.S. outlawed the personal ownership of gold. But in the rest of the world, we saw similar things. And that's kind of what I was looking at over this weekend. But to me, being able to throw a country under the bus and then back and forth go over them, as we are right now, with the only Democratic elected country in the Mideast, seems to me insane. But hey, basically they did the same thing all the way up in the Second World War. Try to pretend it doesn't exist, and I think that's what the stock market is telling us. Anyway, so I would not be shorting crude down here. Let me put it that way. But that's it. Yeah, and from the killing of the Jews in Paris a few weeks ago to everything else, it just continues to look more and more, not less and less, like the lead up to World War II. Mostly the appeasement has me troubled. But there was a famous book called The Guilty Men, and it wasn't after the Second World War that it was written, but it really basically these guys were pariahs after World War, after trying to be the peaceniks of pre-World War II. But could not Netanyahu be the Churchill of England? I think there's a lot to be said for it. They basically want to allow Iran to have nuclear weapons, and it scares me to death. But, maybe something else happens between now and then. We can only hope and pray. But appeasement has never worked. It's been tried 1,000 times throughout history, and evil people will just look at it as a sign of weakness. And people that appease, I would love to play poker against, because I could basically take all their money easily. Aggression in world politics normally is the winner, not the loser. And if you act weak, basically, if you believe the paper, we've already given them 80% of what they're asking for, and they're still holding out for the last 20%. And nothing worse than insane people with nuclear weapons. Question on Baidu, whether or not I would short it. I think it was back in there. What do I think about Baidu? On a chart basis, it doesn't look all that bad out here. You're back into this thing with very low volume. The question is, and I can't get past it, we brought up on Tom O'Brien's show Friday afternoon, was the Baltic Dry Index. And, of course, there's a lot of wheat and corn moved around in those ships, but the big money they make is the weight of iron being hauled. That's their big cash crop, if there's anything for these big ships hauling iron around, and it's just drawn to almost nothing. I also see a big problem with Baidu that is not too different from what we've seen in Alibaba, and that is the desire to be conspicuous in your consumption in China. They really are cracking down on it. So flashing watches, flashing iPhones, flashing a lot of stuff that costs money, really, really being frowned upon. And I don't see that that changes anytime soon. I would be bearish on Baidu, but I have a feeling it's a lot easier to figure out stocks in the United States than to have to worry about how Baidu or how Alibaba is doing over in China. Much harder for us to see the changes, and they can tell us anything they want, and there's no way for us to really check it out, and there's no way to throw them in jail if they lie to us. So they can tell us the stock doubled in value last week, and we really don't have any choice but to believe in them. You think they're going to extradite Mr. Ma if he lies about something? They ain't going to do it. They're just going to take our cash, and that'll be good. To me, just stay away from China stocks. I can't see the benefit when there's so many other stocks that are far more predictable to the upside and the downside. And I want to be able to put the CEO in jail if he lies to us. So that would be interesting. What else do we have going on out here? Looking at some of these stocks that look like they're weak, and we're getting some sell signals. Today, one of the ones that has been some of the strongest stocks, if you still get a close under the 3x3 here today, you want to be watching Advanced Auto Parts. This one has pretty much done everything I wanted it to do, and still probably one of the stronger stocks out here. If they're at the top, they're probably still fairly strong. But the energy off this low from January 16th up has been fairly weak compared to the heavy volume down. And, if you're really thinking about going short something like this, the first close back under the 3x3, which we're probably going to get today, looks like more down. Up 5 points on the S&P cash as I speak, 2.6 billion shares. What else? Vago Technologies, AVGO. Apple's been kind of interesting, and I'll take the overlay off because it doesn't really matter. But what I dislike and maybe worries me, I wouldn't say worry, makes me think that Apple may be topping out around this 119 is the fact that you really couldn't blow off to higher highs on some of the stocks that actually supply Apple with technology. Part of this AVGO is the December 5th high at 105, 2.9 million shares. You got into it with very decent volume. In fact, within 0.5% of that high, you had 2.3 million shares. But you really, you had 2.4. You tried to spike through it, 2.3. You really never got the kind of volume. It was gone above that 105 high. It's closed below it, and that would always make me nervous on Avago. I haven't gotten any signs that would make me short it, but it would be interesting. Another one that has a very interesting pattern out here that did close below the 3x3 on the way back up here last 2 days is Big Lots. This did just about everything, but even a little weaker. Ideally, if this thing would have hit $49 and come in and filled the gap that it had from the 1st of December, I probably would have shorted this thing. Another one, like most of the stocks out here that I have had big retracements back up and filled a lot of the gaps, the energy has been rather light. You're off about 35% in volume and energy on Big Lots on this move back up. Probably why the way it couldn't get back into this gap. But you want to look at that. Look to me like that's probably headed back to $38. One of the biggest bull run stocks out here is Spansion. CODE is the symbol on this. I've been waiting for this. Now, this one, one of the better looking ones out here, and it's got two gaps below. The January 13th, the January 13th high out here at $36.55, 2.8 million shares. Got into it with 880,000 shares on the 28th, and now it's closed back in. So you've got the opening here for 25 and 20, two large gaps. Now the high volume high on the 2nd of December is going to be the one where this is going to come back into. So yeah, maybe 26, 27 bucks, but maybe that's a good one shorting up. Merging with CY. Maybe it doesn't merge with CY. Thank you, though, Z. H&R Block. Very interesting. Tax season in full bloom. You'd think this would probably hold up and be in the mind of traders a little bit earlier. I saw they had a Super Bowl ad. I don't know if that's going to do a lot for them. $35.09 on December 3rd, 4.2 million shares, $35. So it missed it by 9, but only 2.5 million shares on the 28th. This thing's kind of going sideways. It is under the 3x3 displaced moving average, so you have to watch that fairly close. We've got James from Costa Rica. How you doing today, James? Hello? Oops. Guess he'll be back if he can. Anyway, other stocks of interest out here. Live Person. There are a few of these stocks that have already made it back down to their way, and that's why I'm thinking we're getting at least some bounces in this market. I didn't go through a lot of these in my newsletter this morning. I went through the ones that still had moves down, but a lot of these stocks have already fallen apart, like Live Person. This thing gapped up on Huge Energy on the 31st of June last year, 4 million shares. It's back into it with very light volume, and this is where we're starting to see some of these stocks at least try to bounce, but not really getting a big footing. Everybody's still putting their money back into the biotechs on every pullback that they can, still putting their money in Apple in every pullback they can. So a lot of these stocks that should be bouncing out here, that should see energy coming in on light volume tests of gaps up, are not getting them. Let's see, yeah. Code's merging with CY, yeah. Okay, and what else? Bing, hit the mic. I don't do that often. Yeah, if you lie to the government in China, they shoot you. But if you lie to the guys with 50 stars on their flag, probably not. But that's interesting. Anyway, what else do we have going on out here? I got a few stocks. Anyway, Live Person. Now, if you don't see these stocks start to really rip in the next couple of days, I think a pretty good indication that these stocks should be bouncing and are not. And that's mostly what I'm seeing out here. But why I think we're finding at least some level of support. A lot of these stocks have made it back into those lows. We're going to be back in just a second. Hopefully we get our phone call back from Costa Rica. Be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And welcome back here. We're getting warmed up here for the Tom O'Brien Show for the next 2 hours. And kind of watching a market that's flipping back and forth, kind of like a fish on a dock. You know, you get it out of the water and throw it on the dock. Kind of flaps around a little bit. We're up 5 points on the S&P cash, 2.72 billion shares. So volume could be a little bit better out here. Maybe give us a better idea which way this market is going to flip. Maybe it's going to try to flip back into the boat, maybe back into the ocean. But hard to say right now. But we've got about one more day of fund buying, and then that's going to wrap it up for us. So we're going to look at a few other companies. Do we have somebody on the line?
Yes, I'm here.
Okay, he's back. Okay. So what do you want to look at, James?
Okay, here's the thing. We do day trade scalp trading, and we use the VIX 10-minute, the VIX, and we use the 1 minute. And if you look for me, would you please take a look at the 10-minute bar to this morning? And if you can also, well, you don't have two monitors like we do, but at the time of the 10-minute VIX bar, it was peaking out over the Bollinger Band.
Mm-hmm.
And on the VXX, which we trade off of the VIX and the ESH5 E-minis, they were peaking over their 1-minute Bollinger Band, so we went short within the first 3 minutes. And we wrote it down. But I want to ask your opinion. Do you think that's a wise way to look for scalp day trading using those parameters I just discussed?
No.
Okay.
No,
Any advice?
I think what you're trading is something that is far too random to put something that short of time frame on it.
Scalping. I'm not looking for a day or two. I'm looking for 5-10 minutes or less.
Yeah, and I'm saying that mathematically, maybe there's something that you have, or that you're feeling, or that you know in your heart that makes you a good trader at doing that. Mathematically, there's probably a very poor case to be made that you are trading anything other than noise.
Okay, Dave, can I ask you to look at the 10-minute at the end of
I don't have it. I don't have it on this computer, but what I'm telling you is that if you were waiting for the elections for the president, and you asked somebody today, maybe 30 or 45 days before the election, who they're going to vote for, it's probably not as meaningful as asking them about it before the end of the day. There's just too much volatility, and when people get close to voting in the booth, they actually really do think about who they're going to vote for, and there's probably exit polls are great. There's just too much randomness in the S&P and the VIX, because the VIX is the out-of-money puts and calls in the S&P 500, of which, of course, 500 stocks exist. And, you can get a ton of randomness for a lot of different reasons. So my theory on trading that would be that you are trading below the noise level in that. And that's more of it's a mathematical argument, not one saying you can't make money. It's just, I haven't seen anybody that has a formula that shows me that they can trade below what should be the noise floor mathematically. So I would say I don't. I try waiting for the farthest extremes in the VIX to trade it. I want to thank you for your call. We'll see you tomorrow, same bat channel, same bat time, and hang on for Tom O'Brien.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.